Hey everyone, welcome to Built to Scale. Are you wondering about profit fade? Have you heard profit fade in construction businesses and how dangerous it can be? But also wondering how in the world do I deal with it and how do I prevent it? How do I make sure that I'm earning the profits I estimated, that I forecast on my jobs, and that my jobs are profitable? If you're wondering how to do that, listen in today. We have a wonderful episode with one of our CFOs on our team, Layton Johns. Layton is a fourth generation builder, tons of construction industry experience, and we're going to chat through our experiences with some of our clients and what we'd recommend to anybody listening today, particularly in a construction business. The way that we're doing these is there is probably going to be multiple parts to these episodes that we want these to be in bite-sized segments for our audience. So this may be a two-part episode, but yeah, if you are ready to learn about how to prevent profit fade and how to deal with it, listen in. Thanks, everybody. All right. Hey, Lane, how's it going today, bud?
Good. How are you, Mason?
Good, good. Well, I'm so excited that we're kicking this off, man. That I know you and I had we discussed this for a couple few weeks now. That I had the podcast Brewing Business with Brady, and we've decided to kind of revamp it to where we would do something more niche like this, more construction oriented. And so we've kind of come up with this brand name for this series called Built to Scale, and the intent of being, hey, let's actually talk about working on the business in a construction business, and being a just more highly niched in regards to what we're going to talk about, the advice that we're going to try to help business owners with. And so super excited to do this with you, man. That I know that this is a direction we wanted to go for some time, so just glad that yeah, we could finally kick this off, dude.
Yeah, I think this is gonna be a lot of fun. I think there's some definitely applicable topics that we can get to that will be very tangible for a lot of people out there.
Yeah, I'm glad that we're focusing more like this. That I right that advice can be incredibly broad at times. I've recognized even as a business owner myself that sometimes um, it's really important to relate the advice you get to the life cycle stage even your business is in, right? That it may not be that it's bad advice, it's just it's bad advice for what you're particularly facing in your business right now. And so the fact that we can gear this more specifically to construction owners, I think is all the better, right? And so yeah, I want to dive in here with you because one of the big topics that is relevant that we keep seeing with clients, and I think it's even relevant in this macroeconomic condition that many people are facing too. It's profit fade, right? That you brought it up several times as to the risk of profit fade, and I love your perspective in this, lane, because obviously you come as a fourth generation builder yourself. That you are part of a family business that has been doing construction work for a long time, and you're also a financial expert in this. But I think for our audience here, if they've never happened to hear the word profit fade, they probably can get an idea and the term itself what it means. But what would you define to be profit?
Yeah, I think a lot of builders out there, they don't always know the term, but they know what it feels like. Where you've gone out, you bid a job, oh, this is going to be the best job, I'm going to make so much money. And at the end of the day, you finish and you start to look at how it actually turned out from a revenue and cost standpoint, and all of a sudden you had a lot more costs involved in that job than you ever imagined, and your profit faded. It's a lot less than you had budgeted for. And there are things that we can do to catch that along the way if we're, very thorough with our reporting, timely, and can take some time to actually assess, how are things going on this project and not just hope and feel that it's going well until the very end.
One of the scariest things that we hear all the time with any of our clients is the moment that we hear, "Hey, I haven't reviewed my books in a while. I haven't reviewed my financials in a while." And the first thing that comes to mind is where are you at in regards to job profitability? Because at that point, you're telling me you're kind of working off of probably some data, but not a complete picture, and you're working a lot off your gut too. And if you're working on just a couple of jobs at a time, especially for a general contractor, that might generally work. I mean, we definitely advise against it, right? That we need the data to be able to make decisions with and to see what in the world is going on. But especially when you're working many jobs and, as a business owner, you don't have a play and a hand in each of those. The quality of accounting data being reported up to you is key, right? But I'm interested from your perspective because I love thinking about, hey, and I think you've even experienced with me as a business owner that sometimes I run a little faster than most, right? That I'm like, like, let's go, let's move and go. But in the back of my mind, I'm always thinking, okay, if this ends up being a bad decision, what's the point at which we say, yeah, this was a bad decision and we need to pull the plug, right? Or we need to do something critical once we've hit this threshold. And from my past work experience, that was always super important. Is that sometimes it's important just to make a decision and go, right? You can't be at standstill in a business, but you got to know what are the defining metrics that will say when is this not working out and what do we need to do, right? And when do we need to make some decisions? So I'm really interested. What's one of the fastest ways that somebody can tell profit fade is happening? Like, what should they be looking for? What are the key things that, yeah, these would scream, you have a problem that at least you need to dig into further as soon as possible to discover more and how big the problem is? What are some of the key indicators that you would say are screaming in front of business owners' faces that they should be looking at?
Yeah. Well, I think that probably what sets someone like you and I apart from most is we kind of know the nuts and bolts of accounting. And then you overlay that over the knowledge of what a successful construction company should look like, feel like. You start to develop the questions that you should ask. And you see those kind of markers that are, hey, we have a problem here or things are going well that you can kind of judge based off of those. I would say the best tool, the most effective tool that somebody could maintain is an accurate WIP report. I know a lot of companies that are smaller maybe only prepare this once a year for their CPA. In reality, monthly, you should be preparing a WIP report monthly. And what this is going to tell you is specifically it's going to call out your cost to date and it's going to tell you whether or not you're overbilled on a project. But the other thing is you can take a look at what was your projected budget, what was your projected profit on this given project, and based off of what you've billed and the costs that you've incurred to date, what is your actual realized profit? And if you're finding that your realized profit is less than your projected profit, you're starting to experience profit fade. And hopefully you can catch it early, which is why it's important to make these reports up on a monthly basis.
I'm interested to hear your perspective because, especially for jobs that, are multi-year jobs, right? Big jobs that, um, you know, you can wash through jobs that, especially service oriented jobs pretty quickly. You can wash through smaller jobs and figure out what went wrong, after the fact and then try to redo your estimates. But especially on the longer term jobs, I feel like you tell me or defend this against me because a part of it is definitely the whip reporting that tells you where things at historically, right? But I feel like there needs to be kind of a runoff report, where you're forecasting, you're determining what you think should have happened on this job and comparing that, against what is happening on the job. And are you tracking against what you thought? My gut says is, those two things need to go hand in hand together. I shouldn't say my gut, but from my experience so far is those two need to go hand in hand together. But I'd love to hear your experience with that.
Generally, what I've experienced, and I've found it to be fairly consistent with a lot of builders out there, is they start to feel a project's not going well, and all of a sudden they get the bright idea to start consolidating some of those costs from that project onto their next project. And they're hiding the actual results of the project from themselves, robbing Peter to pay Paul kind of a thing. I have a particular client that when they're doing well on a project, they start piling on the overhead expenses. They job cost it onto that job. There's not really a good reason to do that, other than they're kind of hiding their overhead costs from themselves in doing so. But you start shifting things around, like, hey, we went over budget on general liability insurance on this particular job because it went 2 months longer than we expected it to. Well, we don't have any more budget for it, so let's go ahead and throw that cost on this other job. so that we don't look like we were losing money. But in reality, if you accurately costed it, you'd have a better understanding of what this job actually took. And then if you took a step back at the end of the project, okay, what went wrong? Was this weather, something that was completely out of our control? Did we forget to issue change orders timely, and therefore we lost opportunity to increase our revenue? And that's where the profit fade came from. Uh, did we end up finishing another job early and stuck the superintendent and had two superintendents on one job? And all of a sudden, we didn't budget for that, but here we have the cost of two superintendents on this project. And if it's not progressing faster, you're losing money. And so there's all these different scenarios that could have happened. And if you're not taking a step back at the end of the project and saying, what went well, what didn't go well, what did we budget wrong, where did we budget right, and prepare yourself for the next several years worth of work, you start to lose sight of it. And it just kind of snowballs from there. And it becomes everyday occurrence at that point where you're just trying to shift money around to make it all work.
Walk me through, from your experience, because I think the whip report is an amazing tool. At the same time, especially for a company, like a general contractor, a sub that might have, many jobs, it can be tough because, especially on bigger jobs, especially if you're towards the front end, you can see your cost to date versus your budgeted cost. And um, parts of me wonder, do companies and business owners or construction companies, do they struggle in determining, you know, especially towards the front end of a job that, hey, those estimated costs, are we way off from those two, right? Like the whip report doesn't necessarily spell that out like in full detail for you. It takes some digging into the individual job detail itself, right? Do you agree with that, or like what would you add to that to make sure that the whip reporting is useful? Like when somebody gets it, what should they be digging into and looking at?
I would agree that if you've estimated and budgeted for a lot of line items on a given project, that estimated cost to complete is truly just that, an estimate. You don't really have a hard number for what this project's going to take. If it's a hard bid job that you've actually gone out and you've gotten bids from subcontractors and you know how much your material is going to cost and you have the ability to lock in those prices, then it becomes a little bit more of a hard, guiding principle or number that you can kind of actually bank on. Um, but I will say, and when I was building, I was guilty of myself. Like I would estimate things, and half the time I'd overestimate and we found money. The other half the time, oh shoot, I forgot these few things that had I just asked a sub to give me a hard number, I probably wouldn't have forgot those things. And you end up eating them. And so, yeah, I mean, early on, depending on your philosophy for how you're bidding out a project, that number could be very accurate or it could be 80% accurate. And then it's up to you to go find a way throughout the project to make it work for you. And at the end of the day, if you don't use it as a learning experience, you could end up finding yourself in a bit of a bind.
At this point, say for, one of our clients that we've discovered profit fade is happening. How do we course correct? And I mean specifically, what's your advice to somebody on that particular job to try to course correct?
Sometimes it's difficult, if I'm being completely honest. A lot of projects, you have to start them from the onset from a really good point of communication with your client, number one. If you are not comfortable issuing change orders early for things that are truly changes, it starts you off down a very slippery slope of you may not be able to catch up things that you did never have budgeted because they were never part of your original project. Your client may develop this mindset of, well, that should have just been a part of the project. You haven't really been communicating to me what was or wasn't a part of this project. And so that's really the starting point. And so if you don't start off from a good point of, constant regular communication with your client about expectations and what is and is not a part of your project, um, you're really hurting yourself and you need to develop those tools and resources and start having those conversations on future projects. Assuming that you're already in a project and you've experienced some of this and you do have relevant change orders that should be issued to your client, you need to stop what you're doing, have those conversations, and get those change orders signed. Finding revenue in a project is a lot easier than cutting costs in a project. The project's going to cost what it's going to cost to complete. And if you compromise on your costs, you're compromising on your overall project, and the result is not going to be pretty at the end of the day. And it may end up costing you even more in the long run. You're better off turning out a good project and having a good name and learning from it than to start finding ways that you're going to provide a subpar project for your customer. Outside of those things, it really comes down to an assessment of, am I utilizing my staff fully? Can I take a superintendent and put him on another job to where I'm spreading out his cost on two projects instead of one? Are there things that I've been costing to this job that aren't relevant to this job? Uh, Such as I'm costing the owner's vehicle and fuel to this job when really it has nothing to do with this particular project, and start to more accurately track your costs for this particular project. Um, and if you know what your costs are, again, you may have an opportunity for a change order. You can back it up, and it's not convoluted with all these things that don't really aren't really relevant to the project. And so, it starts with communication, understanding when you deserve a change order for a change in scope, and taking the time to really assess your staff. And you may have a superintendent on a job that shouldn't have been on this job because they're not experienced in it. Or maybe the superintendent can be on multiple jobs, but really assessing, am I fully utilizing my staff so that I'm getting the most out of them on a day-to-day basis? Because that's really the slow bleed on a project. If you've got a project manager or superintendent that is really dragging the project out, they're not pushing it through, you won't know early on that you've got profit fade. It's going to sneak up on you, and you're 3 months from the end of the project and realize, I'm not making any money because this job took 6 months longer than it should have.
Hi, everyone. So, if you enjoyed today's episode and you found value, or it raised some questions for you about the next best steps for managing your finances in your construction business, please reach out to us at bradycfo.com. There's a contact page there where you can fill out, and that will come straight over to us. Either that, or you can personally find me on LinkedIn. My name is Mason Brady, and feel free to send me a message. And happy to chat and talk through anything you're facing today, and happy to provide some advice. So, thank you all. Appreciate it. See you.